first guest says the ASX is trapped like a rabbit in a spotlight, cast from the Middle East. To get across the technicals, Tony Sycamore from IG joins me now. Okay, Tony, let's start then with what we're seeing with our market. Trapped like a rabbit, you say?
I do. The ASX 200, as of this morning, has traded in a very narrow 54-point range for the first two and a bit trading sessions for this week. And it doesn't seem to know, it has resisted the temptation to rally following the stronger open in US equity futures on Monday. And again, yesterday, it wasn't really interested in following US equity futures lower. So to me, it's a bit paralyzed. And whether this is a moment of inspiration or insipid performance, I guess we'll find out. But what I'm looking at in the ASX 200 is that we have seen it push up to a fresh record high. Hasn't been convincing at all. We saw a loss of momentum candle form at that record high. And then we've seen some downside follow through. Now, that to me suggests we've got a preliminary signs that potentially we have topped out, but we need to see the ASX 200 break below 8,500. And if it were to do that, the orange line there, the 200-day moving average, is the initial target coming in around 8,200. So watching for a break of 8,500 in the sessions ahead. All
right, let's flip back to what we saw on US markets overnight, particularly with those tech stocks. I love when you talk about the Elliott wave. What are we seeing on the NASDAQ?
Yeah, look, I mean, a bit like the ASX 200, it does look toppy to me. I suspect we've seen a correction from the February high down to the April low, and we're now looking for a 5-wave advance from the lows of April. We've got 3 waves in place. I think we're waiting for a 4th wave, a correction lower, again back towards the 200-day moving average. That comes in around 20,500. So somewhere above there is where I'm looking for the pullback in the NASDAQ to unfold to, and then I'd expect to see another leg higher. Now, there's a few variables coming into the mix. Obviously, the Middle East is one of them, but as we were just chatting about, one of the big things for me is that the Middle East has created a very murky backdrop, become even more tricky for the central banks of the world to navigate. And I think that's going to be interesting ahead of the Fed's meeting tomorrow in terms of, if we look at what happened back October 7th, 2023, it was almost a trigger for the Fed to move away from its hawkish bias to set up rate cuts into year end and the following. And obviously, there was a very large bounce in the stock market from that time in around that early October period. And that came about, as I mentioned, because the Fed turned dovish. And I think there's a chance that we see that again tomorrow. Now, what that might look like is potentially we obviously keep rates unchanged, the dots stay unchanged, projecting 2 rate cuts, but we start to hear more dovish tones mounting from the press conference there. And this almost gives Fed Chair Powell the perfect cover to move to a more dovish bias. He's resisted that so far. He's resisted the pressure of Trump, but that's a risk to me, which should be close to 50% priced. And I think at this point in time, it's close to 10 to 15% priced.
All right. So dovish potentially outlook from the FOMC. It's all about as well what's happening in the Middle East and President Trump leaving the G7 summit early. How is all of that playing out in oil, given that huge spike we saw on Friday's trade?
Yeah, that's right. Well, I mean, there has been a huge amount of volatility in crude oil, and I expect that to continue. The pullback in crude from Friday's high held about just above that orange line, which again is a 200-day moving average. So while crude oil remains above the 200-day moving average, coming in around 68.50, I think you've got to allow for further upside, a retest of that 77.62 high. And if it can get above here, then of course you've got the highs coming in around 80.77. You can see on the chart there. So right here, right now, we just have to use some sort of safeguards because we're seeing such huge moves in crude oil. It makes it very, very enticing to trade, but also challenging. So it's really important to have some safeguards in place. And for me, it's that 200-day moving average.
All right, let's move in terms of what we're seeing with gold as well, because it could potentially now test these 3,500 levels again.
Yeah, there's a little bit of cooling has come out of the market yesterday. And right here, right now, it's still holding, for me, the uptrend. You can see the uptrend quite clearly there on the chart. So while it holds above 3,300, I think there's a very good chance we can retest that 3,500 high. We just don't know how things are going to play out in the Middle East. There appears to be now a goal of ending the tenure of the current Iranian regime, and that may go well, it may not go well. But that uncertainty just plays perfectly into gold's hands. And I suspect, as I said, while we hold above 3,300, allow for a retest of that high.
Now, it's been very light on in terms of data. We do have jobs data coming through tomorrow. But what are we seeing with the Aussie dollar?
The Aussie dollar has been very much range bound range bound, Jules. So what you can see is we had that very impressive bounce from the April lows, and then it really found itself trading in a range between 65.50 and 63.50, and smack in the middle of that range, the 200-day moving average coming in around 64.30ish. So I think, like many markets, it's waiting for some clarity as to what comes next out of the Middle East and whether the Fed will continue to focus on the inflationary impacts of tariffs at this point of time, when I suspect there's greater concerns in the world. And if we do get that dovish pivot out of the Fed, whether it be tomorrow or in due course, it is coming. I do strongly believe that. That probably gives the Aussie the next leg higher up towards 67.40.
All right, I just mentioned the stablecoin bill potentially being passed. I know that there's still another hurdle to go, but what does that all mean for Bitcoin?
Well, Bitcoin's part of the risk complex. It really is. And we can look at it potentially being a safe haven. Sometimes it trades like a safe haven, but to me, it's part of the risk complex. And the risk complex overnight was lower. And you can see now Bitcoin has broken below some uptrend support. So I suspect what we're seeing now is the beginning of that Elliott wave third leg lower for a correction, the wave C, if you like. You can see the wave A and the wave B is complete. So looking for a pullback towards the support area coming in around 100,000 to 95,000. And while it holds above there, you need to allow for a retest of those highs. But overall, Bitcoin to me seems to be correcting, consolidating after a very strong run higher. And this is all part of that process.